Hello everyone. Amazon just fell over 8% after earnings today. And in this video, we're going to go over why Amazon fell over 8%. We're going to look into their earnings and exactly why people started to sell the stock. We're going to look at why Amazon is still a great business, and why nothing really fundamental has changed, and why this company is still a great buy today, even though over the last 1 year they have risen significantly, especially from their recent April crash. So when looking at earnings, Amazon did report second quarter earnings, which did beat expectations. However, the company did show profit guidance that was a bit lighter than what Wall Street forecasted it to be. And this kind of spooked other investors who ended up selling off, as they believed that AI would eventually pay off and create more profit for this company. And if we look at the specifics, the earnings per share was a massive beat of $1.68. Revenue was a major beat, which revenue is one of the most important things for a company, and this was an incredible beat of 167.7 billion versus the 162 billion that was expected. And even when looking more deeper into their key revenue sources, AWS, which has been usually what most people look at as this is one of their most profitable sectors, was also a beat, which is really good, and also advertising on top of that, which is also a beat. So they had stellar earnings, stellar revenue, stellar basically all across the board. However, they did end up getting spooked by their profit guidance, and we'll look more into that because as you can see, Amazon has a massive investment into AI, which most investors expect to pay off and give more return on investment for them. And on top of that, Amazon has had amazing earnings overall, with about 10 to 13% year over year growth, which in revenue is really strong and at the right price can definitely give returns of this level, if not even more, depending on how much they cut costs, or on the other side, how much they put more into their CapEx. As I've said before, the Amazon's cloud computing unit, AWS, is still one of the most important businesses for Amazon, as its profitability is incredible. And there's Amazon itself is doing incredible, about $30.87 billion of revenue year over year. And this is just a ridiculous amount, especially because the profit margins for this is extremely high, of about 30 to 40%. And AWS, although their growth has slowed down, it still remains at 18%, with Microsoft Azure and Google Cloud both at 39 and 32%, which I believe both of these companies are also incredible. However, I want to look at more on Amazon because of its valuation, and that being slightly undervalued in my opinion. But before we get into that, I want to look at Amazon's advertising business, which is really their second biggest and strongest business, as it's also growing at an incredibly high rate of 23% year over year. And if you look at this chart that CNBC has, they have from 2020, they have done exponential growth to their advertisement business, which is really good because the advertisement business, as seen with Google especially, is extremely profitable. And Amazon has very good targeting through their business, which you can see in my previous video. And this is just an amazing business overall. And these two businesses just show the strength that Amazon has, and that they beat in both sources, both ads and AWS, showing that even though the stock fell by over 8%, these two businesses can hold up, and these are two of the most important businesses for Amazon when looking into their future. However, Amazon still faces issues with tariffs and trade policies that are happening because of all these different things that President Donald Trump is putting. And this is still affecting their business according to their management, as they state in their investor relations. However, I don't see this as a big issue for Amazon's long-term businesses, as their cloud and their advertisement businesses are not as affected by this as seen in the recent earnings, which still count the recent changes from tariffs. However, this can still change based on what happens in the future and how much tariffs are increasing and what it affects. When I analyze companies when I buy them, the two most important factors for me are revenue growth and the free cash flow. Revenue growth is essential for long term, as it's consistently been an indicator for long-term growth, and having good revenue consistently is incredibly important. And Amazon has mastered that, with growing revenue all the way from 2010 or 2009, from what this data has shown, all the way to today. They've had growing revenue every single quarter, and has been incredible. They had a slight slowdown back in 2021, 2022, but that is also because the massive COVID boom and also the recession or the almost recession back in 2022. However, Amazon has had amazing revenue growth, which just proves how good of a company this is. But that's not it. Amazon's free cash flow is very inconsistent, as it has periods where it goes up and down, and they were even negative back in 2021, 2022. Now they are at their all-time high. However, I don't believe this is the best way to look at this, as even though looks really good as they're reaching all-time highs, Amazon is heavily weighed down by their capital expenditures, especially in the recent quarters, into AI, and this could really dam down what the free cash flow shows. But I don't believe this is really the appropriate measure to look at for Amazon because of the capital expenditures. Instead, I want to mainly focus on revenue growth and also earnings a little bit to look at it more in a larger picture, especially because TradingView does show the different forecasted growth for Amazon's revenue and earnings per share and even price, where the revenue is expected to go all the way to close to $1 trillion by 2028, which is nearly a $300 billion increase, or more than $300 billion increase from the 2024 reported revenue earnings, which is incredible and would likely show massive growth in the overall stock price. And as people start to realize that how good of a company Amazon is, I'm pretty sure the price will increase in the market cap alongside with it. Even the earnings, which have which has been where their estimates have been beaten continuously over several past years, are expected to hit about $11.54, which is nearly doubling from where they are right now. And I believe that they will even surpass this unless a recession or a major crash happens. But I do believe Amazon is heavily undervalued for this type of growth, as they don't account for this in their price, as even right now, where Amazon's PE ratio is 32.75 and their 4 PE is about 30, which is not that much higher than the S&P 500's PE of 25. And with Amazon's high growth and their extremely high capital expenditures, Amazon does not look expensive whatsoever right now. And with the qualities we looked at before, and even with this massive drop of 8%, which looks like there's a massive issue happening with Amazon, although it's just investor fear. I believe Amazon is a great buy, and analysts also agree with expectations of average 20% increase in the next 1 year. And I believe this can even do possibly more than that and go probably to even $300 as people start to get more bullish on it. But it really depends on what the near-term market sentiment is, and that's really not predictable that much. But I still believe Amazon's one of the best, if not the best, tech stock, or at least Mag 7 stock to buy right now.